U.S. core inflation slows in November, boosting Fed rate cut prospects. Core inflation in the U.S. slowed in November, falling below expert forecasts according to the Federal Reserve's preferred inflation gauge. This development strengthens expectations for further interest rate cuts. The Commerce Department reported on Friday that the Core Personal Consumption Expenditures (PCE) price index rose 2.8% year-over-year in November, matching October's figure and coming in slightly below the forecasted 2.9%. On a monthly basis, core PCE increased by 0.1%, lower than the 0.2% forecast and October's 0.3% rise. Headline PCE inflation rose 2.4% year-over-year, below the expected 2.5%, while monthly gains were also 0.1%, compared to the anticipated 0.2%. The Federal Reserve uses the PCE index as a primary inflation measure, though inflation remains above the Fed's long-term 2% target. This report follows the Fed's recent decision to cut interest rates by 0.25%, bringing the benchmark rate to a range of 4.25% to 4.5%, the lowest in 2 years. However, Fed Chair Jerome Powell hinted at fewer rate cuts in 2025, lowering expectations to 2 cuts instead of the previously anticipated 4. Despite Powell acknowledging inflation is nearing the Fed's target, he noted that the adjustments reflect expectations of slightly higher inflation next year. Gold and dollar movement. Gold futures rose 0.50% to $2,621 per ounce. Spot gold climbed 0.44% to $2,606 per ounce. The dollar index declined 0.4% to 107.73 points,